Hello traders, today's video is going to be a very important video for a lot of you who's making losses in the stock market. I will be teaching you a strategy which I think can help you recover all your losses. I can tell you this for sure because this is the first strategy which I learned that had helped me recover all my losses which I made during my initial days of trading. This strategy gave me the confidence to believe that if we have a good strategy, you can make consistent profit in the stock market. The strategy which I'll be teaching you today can be used for both intraday and swing trading. So without any further delay, let us get into today's topic. There is one request, please share your support by liking the video and pressing the bell icon and share your views in the comment section. Only by doing so, I can know what kind of videos you want me to do next. Now please try to pay complete attention for the next 3 minutes because it's very important. Okay, let us start. So we all know that the most used charting style in the stock market is candlesticks, correct? This is because it is the best and fastest way to know the present market condition and the psychological level of traders. But there is a problem with candlestick. What is this problem? Let us understand it with an example. Okay? This is Bank Nifty chart, daily time frame. I'll be using this chart to show you how people trade with candlestick pattern and lose their money in the stock market. Okay, I'm just talking about beginners or intermediates who do not have so much idea about the stock market. The first type of mistake which a lot of people do is, for example, you can see that the stock is in uptrend, right? It's making low, high, higher lows, higher high. Now they watch the news or they come and see Bank Nifty. They see that Bank Nifty is making a movement like this, right? So they feel that they have a good trading opportunity. A lot of people bought here thinking that this is a breakout, right? The stock is moving high. After this, the stock will move even higher, right? So what happened to all those people? The market went down. The stop loss where they would have kept here, it just came down and hit the stop loss. They lost the money, they exited the trade, they went. Okay, this is the first kind of people who just see the movement of the market and they will take a long position at a higher value, maybe by just seeing the chart or reading news, whatever it is. Okay, this is the first common mistake beginners and intermediates do. Now there are other people who will wait for the breakout. Okay, so the same candlestick, if you see, the stock is going upwards, right? If I zoom in and show it to you, this is a green candle with volume and this is considered as a bullish candle, right? A lot of people would have taken a trade here thinking the market will go up. They might enter at the next candle and stop loss where they will keep below this candle or this candle. Whichever candle they keep their stop loss, the market just went down, hit their stop losses and the market went upside. Now this is what a lot of people fail to understand. This is very basic, okay? But a lot of people do not understand this. Now the same chart, okay? The same chart, right? If I show another way, where and all we had false signal, let us see. See, this is a bullish candle. People entered the trade here, but the stock moved within a narrow range, right? And now this is a bearish candle. A lot of people shorted here, but the market did not go down. It went upside. So that's a false breakout. And one more bearish candle, the market went down here, right? People took position here. There's a strong bearish candle. After this, what happened? The market went up. People lost money, right? Same bullish candle, people took a position here. The market did not go up. It went down and hit their stop losses, correct? Now, to understand all this false breakout, people have to spend time in the stock market. A lot of people lose their money during this false breakout itself, entering at the wrong time. Okay, so the same chart, if I go back, this is the same chart, and now if you see, there is no consistency in this chart, right? Random green candles, random red candles, a green candle, random red candle, green candle. So this is confusing to a lot of people. So what I'll be doing now is I'll be showing you a strategy using Heikin Ashi candlestick pattern. Okay, what is Heikin Ashi candle pattern, how to use this, how to enter a trade using this strategy, we'll look into that now. Okay, this is the same Bank Nifty chart daily time frame which I showed you earlier. Okay, the left side chart and the right side chart is same, right? Can you see open, high, low, close, both same, right? This is a candlestick chart pattern on the left side. On the right side, what we will do is we will apply Heikin Ashi candlestick pattern and see the difference between the left side and the right side, so that you get better understanding about why we should use Heikin Ashi candlestick pattern. To choose Heikin Ashi candlestick pattern, all you have to do is click on candles. Here you will have an option to choose Heikin Ashi. Once you choose that, immediately Heikin Ashi candlestick pattern has been applied on the right side. Okay. Now let us understand what is the advantage of Heikin Ashi candlestick pattern. Okay. Can you see how many irregularities? Random red candles, green candle, red candle, green candle. But if you see here on a Heikin Ashi chart, beautiful movement towards the upside and one single red candle, again movement towards the upside, again movement towards the downside. This side is less confusing than the left side, correct? If I go back a bit, same chart, this is the same chart, but on the left side, random green, random red, green. But if you see here, beautifully it's moved towards the upside with green candle and again red candles and again beautiful green candles. Even if you go even back, you can see that the Heikin Ashi candlestick pattern is less confusing than which is there on the left side, that is normal candlestick pattern. See how irregular this is. Now you might have a doubt why this side candlesticks of the same chart look different here compared to here. Why does this side look very clean? Now let us understand the difference between these two. In a normal candlestick, example this candle does not have any relationship between the previous candles. So I have taken a daily time frame, right? This one is just the days low, high, open and close. Okay. But when it comes to Heikin Ashi chart, there is a relationship between the current candle with the previous candles. Okay. This simply means that candlestick pattern is a leading indicator that shows current movement of price, but Heikin Ashi chart is a lagging indicator. That means it takes previous data to calculate, and for it to give out results, it will take much time. Always I have told you guys that leading indicator is always better than lagging indicator. But people who are beginners, intermediates, they get confused with this. They don't use price action, right? So for those people, this kind of chart is going to be very helpful. Now I will just show you the formula how this is calculated. Okay, this is just for your general knowledge. You don't have to calculate all the time, but you need to get understanding as to how this is calculated. But once you understand it, you can forget it, right? After that, I will be showing you how to enter trading opportunities and make consistent profit using Heikin Ashi chart pattern. Okay, now traders, please understand this very carefully. Okay, when it comes to candlesticks, general candlesticks, the current candle does not have any relationship with the previous candles. All these candles, it will not take into consideration. Okay, so example, this is a bullish candle, right? The bullish candle, open will be here, close will be here, the highest point will be the high, the lowest point will be low. This is bullish candlestick. Likewise, on a normal candlestick, open, close, low and high is calculated only with the values of this particular candle. It will not take into consideration any of the previous data. Hope that is clear, right? If I change the candlestick to Heikin Ashi, you can see the difference, right? Now why there is a difference between a normal candlestick and Heikin Ashi candlestick is because, example, this candle does not include only the value of this particular candle. It will take data from the previous candle to give the average price of this candle. Now what is the formula to calculate Heikin Ashi candle value? So this is how Heikin Ashi candlestick pattern calculation happens. So the open is previous candles open plus close divided by 2. So this candle calculation is derived by the previous candle's open plus high divided by 2. So open of this candle plus close of this candle divided by 2 is this candle's value. Similarly, high is calculated with the current candle's the highest point. Low is calculated by the current candle's the lowest point. So this is the current candle, the highest point is the high and the lowest point is the low. And low is calculated with previous candle's data, that is open plus high plus low plus close divided by 4. So this candle close is calculated by the open, high, low and close divided by 4 of this candle. That is how the close of this candle is calculated. Now you don't have to remember all of this. This is just to give you an idea as how this is calculated. That's all, nothing more. Right? So now that you know what is Heikin Ashi candle, how is the value of calculation is done in a single candle. Now let us see what are the signals for us to enter in a Heikin Ashi candle. Okay. Now let us learn how to find trading opportunity while trading with Heikin Ashi candlestick pattern. Okay. There are 4 different candlestick patterns which you need to pay attention to when you're trading with Heikin Ashi candle pattern. Okay. Now, the first type of candle pattern is this one. Can you see? I will zoom and show it to you. This is a green candle, okay? And this green candle do not have a wick, right? Open is here, close is here, high is here, right? When open and low is same, okay? That is called a bullish candle. So we need to search for buying opportunities, okay? Same way, can you see this candle? This candle do not have a high. The open and the high of this candle is the same, but it has a wick towards the downside. That means this is a bearish candle. When this candle comes, we need to look for shorting opportunities. That means selling opportunities. Okay? For bullish candle as well as bearish candle, there should not be any wick. For bullish candle, no wick at the bottom. For bearish candle, no wick at the top. Okay, so I hope you have understood it so far. Now, the third candle is doji candle. Can you see this? When this candle comes, there is a high chances of trend reversal. Okay, so example, when the market is going up like this, right? Here if you find a doji candle, a candle like this, you need to exit the trade. So your entry will be here and the exit will be here. Okay, there are other important things as well, but let's cover it one by one. So the first point, when bullish candle, look for buying, bearish candle without any wick, selling. Okay, when it's a doji candle, that is when you will decide your entry and exit. Example, the market went down here, right? Here you found a doji, correct? That means you need to get ready for buying. After this, you got a bullish candle. That's second confirmation. So you will enter when the next candle opens at this level and you will exit at this level. Okay. The fourth type of candle is this candle. It looks somewhat like doji, but open is here, close is here, but the wick, if you see, it is very big. This side also big wick, this side also big wick. That time we say it is a weak candle. For example, the market was going high here, right? Here, can you see a weak candle? At this time, you need to be prepared with exiting your position. Okay, so in total 4 candle, bullish candle for buying, there should be no wick at the bottom. Bearish candle shorting, should not have wick at the top. Doji candle, signal for exiting the trade. And one more thing, doji candle has to be opposite color. So when market is going down, green is the opposite color. When market is going up, red is the opposite color. Okay, and when weak candle comes, you need to be prepared with your exit. Okay, these are the 4 important candle which is very important for you to make successful trade. Okay, please pause the video, have a look. Only when you're confident with this, continue with the next step. Okay, if you want, you can rewind and watch this again, because these 4 patterns are very much important. Without these patterns, difficult for you to trade. Now traders, there is one more important thing. See, this is a Nifty 50 chart, 15 minutes time frame. Okay, so please pay very close attention. This is very much important. Okay, so when the market is coming down, you should only look for shorting opportunities. Okay, I'm talking about Heikin Ashi chart. So when you put Heikin Ashi chart, draw a trend line like this. Okay, you can see that line towards the downside, right? That means market is going down. So at this time, you need to look for only shorting opportunities. Point number one. Okay. Point number two. When the market is going up, see this green trend line is showing that the market is going up, right? At this point of time, we need to only look for buying opportunity. At this time, if you look for selling opportunity, it will hit your stop loss. Okay, very important. So when the market is coming down like this, you need to look for this kind of candle. Okay, and when the market is going up, you need to look for bullish candle, which is a green candle. Okay, because this will be your entry decision point. Only when this kind of candle comes, you need to enter the trade. Okay, until now we have discussed about Heikin Ashi candlestick pattern, and we have also discussed the 4 important signal candles. Okay, and then we have also discussed that during downtrend you need to buy, during uptrend you need to sell. Okay, very important. Whenever you are taking a trade, you need to pay attention to this. Okay, traders, now that you know all the important things that is required for you to trade in a Heikin Ashi chart, let us see some live examples. Okay, I am taking Nifty March futures chart. Okay, and then I have chosen Heikin Ashi. Okay, now this chart is in Heikin Ashi, and now along with this I have included 50 EMA to increase the consistency. What is the use of this 50 minutes EMA is? EMA is above the candles. See, candle is here, 50 minutes moving average is here, right? That means market is bearish. Okay, and here if you see, when the candles is above the 50 minutes moving average, that means the market is bullish. Okay, now let us see from March 1st what happened. See, this is March 1st. 50 minutes moving average is above the candle. That means the market is bearish. As of now, there is no trading opportunity. But here if you see, I have got a doji candle, right? Opposite color, doji candle. And next candle is a bullish candle, which we discussed earlier. That means I have to enter at the next candle, right? But I will not enter this. Why? Because 50 moving average is above this. If I would have entered, the market would have gone up, I would have made money. But that is not how we work. We need to stick to our strategy. Okay, here even if there was a trading opportunity, I will not enter. Okay, because 50 moving average is above the candles. Now let's see. The market went up and now 50 minutes average is below. That means the market is bullish, right? Now here, can you see a doji candle above the 50 minutes moving average? That means the market is bullish, and then I'm getting a signal here to buy, correct? This is a bullish candle. Can I zoom? See, if I zoom, this is a bullish candle, right? Now I will enter when this next candle opens. I will enter somewhere here when this candle is moving. Stop loss below this. Okay, what will be my target? When I get a opposite color reversal candle. So this is opposite color reversal candle. So I will exit the trade here. So entry over here, exit over here. How many points? More than 150, 200 points. Very good profit, right? So now the market went down, right? But moving average is below. That means market is still bullish, right? After consecutive green candle, what happened? I got a doji candle, right? This doji candle is green color. Market came here, doji candle is green color. That means market is bullish. Next candle is a bullish candle. So this is my second confirmation to enter. I will enter the trade here. This will be my entry candle. Where is my exit? My exit is opposite color here. This doji candle is red color. After these green candles, A red colored doji means it's time for you to exit the trade. So exit here, entry here, exit here, stop loss here. Done. Next, market is still bullish. After this doji candle, I got which candle? A weak candle. So weak candle, what happened? Market went down. Now 50 minutes moving average is below, right? At this point, the market is coming down, again down, no trading opportunity. A doji candle, again a red candle, that means no bullish. Okay, again this bullish candle I will not enter. Why I will not enter? Because previous candle is not a doji of the opposite color and 50 minutes moving average is above. That means market is going down. So why should I search for buying opportunity when 50 minutes moving average is saying the market is going down, right? Now the market went down here, a doji candle, this is a weak candle, then a bullish candle. Still I will not enter here. Why I will not enter? Because 50 minutes moving average is above. That means market is weak. But after this, the market went up, it made profit. That doesn't matter to me. I need to increase my consistency, right? My consistency will happen only when I get a bullish sign and 50 minutes moving average is below, right? Now traders, one more example, Bank Nifty futures, okay? Let's see how this strategy works in 15 minutes time frame. See, the market is in downtrend, right? Here we need to look for only shorting opportunities, correct? I can take a trade anywhere here. For example, I take a position here. This is a very big candle. I will not take a position here. This candle I will take a position, right? When the next candle opens, stop loss here. The market went down, right? Market went down. So here I can see a green doji candle. That means trend reversal candle. So I exited the trade here. Simple, right? Now here I've got a bullish candle. I can enter the trade, but I will not enter because 50 EMA is above. Even though market is bullish, 50 EMA is above. So I will ignore this opportunity. I ignored it. So what happened? The market did not hit my stop loss. See, that is the main reason we need to include 50 EMA and Heikin Ashi chart. Okay. Now the market is bearish, right? So consecutive green candle, here a doji candle, that means opposite color, that means trend reversal candle, right? So I will wait for a bearish candle. This is a bearish candle, but if you see, there is a small wick about this. I will move the cursor little this side. You can see this candle, right? There is a small wick. So I will not enter this trade. There should not even be a small wick. Okay. If I would have entered this trade, it would have gone down, I would have made profit. Here reversal candle, I would have exited. But that is not how it works. Even a small wick on top of a bearish candle, you should not enter the trade. Okay. So then the market went up, market is above. And here I got a doji, but same color. So no trend reversal, correct? So Nifty went down, Bank Nifty went down, 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 down. Here I'm getting a doji candle. Which color? Opposite color of the previous candles. That means a green candle. Enter. Where do I enter? When the next candle opens, right? But next candle is below 50 EMA. That means the market is in downtrend. I should not be looking for buying opportunity. So I will wait. Okay. Market went up. I don't care, right? So after this, trend reversal candle, but after this I did not get a bearish candle, so no downtrend, right? After this the stock came above 50 moving average. Now if I get a bullish candle, I can think about entering. I did not enter at this candle because it's touching 50 moving average. This candle was too big. If I enter when the next candle opens, my stop loss I have to keep very low, right? So that is not required. So I ignored this candle. Next also is a bullish candle, right? So what I did, when this next candle opens, I will enter at this candle, stop loss below this candle, and target will be, it got weak here, right? So there was a possibility for us to short, that means exit the position, you would have made very good profit. But if you had hold it, there is no opposite color, the market went down, hit your stop loss. Okay, there is no strategy that is 100% successful, but the success rate of this strategy is very high. Okay, so these were some of the examples, traders. Now go back test it and see how it works for you. It works even with stocks and all, you can try, but try more than 15 minutes, because in Heikin Ashi chart, when you take an average, when you do it on a higher time frame in Heikin Ashi chart, at least 15 minutes time frame, that time the amount of same colors what you get will be very high. Okay, even on 5 minutes time frame you will get trading opportunity, right? You can have a look, try the strategy, let me know. If you have any doubts about the strategy, let me know in the comment section. I'll be more than happy to help you. And also, do not forget to subscribe and press the bell icon. I suggest you to have a look at our price action lecture series course, where we teach you A to Z about price action trading. We also give you 6 price action strategies which you can use for intraday and swing trading. If your goal is to become a full-time trader, then I recommend you to have a look at this course. The link for the course is in the description box below. Okay, so traders, that's all for this lecture. I'll see you in the next one.